Okay, everyone, we'll give everyone a chance to sign on. And in the meantime, we'll go over a little bit of the legalities. Past performance is no indicator of future performance. We are not registered, certified advisors of any sort. This show is for entertainment purposes only. Nothing in this show is an offer to buy or sell any security or anything other than a membership, if you want. And you should always read the disclaimer. Just get into that habit. It's a good habit to be into. It's a critical habit. Read that fine print. Take the time. So give everybody a little chance to sign on here. Get our agenda ready. Get a little sip of coffee. It's an interesting day in the stock market. So let's go ahead and get started. First of all, so the NASDAQ, largest 3-day losing streak since March. We ended up down on the NASDAQ about 1.5%, down about 100 points. It was real ugly. It got a little nice during the day, got a little ugly during the day, kind of bounced around. The S&P 500 finished down about 16 points. It's pushing down to that 2,800 level, which is a little bit of a psychological level, right? Those even numbers, traders like those even numbers. And the Dow was down about 90 points. This is after Caterpillar having some nice earnings this morning. So Caterpillar was really the earnings of the day, and it was fairly decent. Wasn't enough to buoy the market. Social media stocks just brought the whole market down. Facebook, all your social media. Facebook was down another 2%. Twitter was down an 8%. Twitter's lost a quarter of its value in the last few days. So it's just getting hammered. Snap was down 4%, just to name a few of those social media stocks. Social media stocks are under fire right now. There's a lot of bad sentiment in social media stocks right now, and it's for good reason, right? Facebook has been going through all this privacy issues, and it was bound to catch up with them, right? The Cambridge Analytica. Now there's a big story about Mark Zuckerberg. I guess he sold some stock before the earnings report came out. So is that a little insider trading? We'll see. Well, let's see if it's different than when a right-winger like Martha Stewart, right, who went to jail for doing the same thing. Let's see how it is when it's a liberal darling. Let's see if they give them the same treatment. But on the same thing, at Facebook, we think there's some promise. I mean, it's a behemoth of a corporation. It's really got it's got a nice web of revenue generating businesses, Instagram and stuff like that. It's not going anywhere. When you hear that talk on the message boards and stuff, it's the end of Facebook. It's just for grandma and stuff. Don't kid yourself. Facebook's still powerful platform, and it has some very serious relevance in the business world. So we think if you wanted to own Facebook, now's the time to take a look at it, right? A week ago you would have been paying $200 a share. Now you get it for about $130. I mean, $130, $140. If you like Facebook, man, now's the time to get it. Snap, we're in a Snap play we've been talking about for about a week and a half. Snap got hammered today. Got down to that $12 range. It lost $13. We're not real concerned with it. It's got earnings coming up, and this social media selling, this tech selling is really, it seems like it's just overdone. It's gotten to a point where it's blind selling. It's just panic and knee-jerk reaction. So take it with a grain of salt. It's a stock picker's market. We've talked about this too. It's a stock picker's market right now. A sector like social media, tech stocks, yes, the overall sentiment for it can be bad, but there are stocks that will do well and will come out of this like banshees. We think Amazon's one of them, of course, Google, and we think Facebook's still in good shape, decent shape. Now, if you owned it at $200, you don't feel the same way we do, but we didn't own it at $200, and we wouldn't have bought it at $200. But at $130, $140, it's starting to look attractive again. Now, let's talk about Twitter. We posted a little article on our I Love Investing site today about Twitter. Twitter, we've talked about it quite a few times. We've made a lot of money this year off Twitter. We've been long, we've been short. We've been all over the place with Twitter, but our overall sentiment of Twitter is the longevity of it is not going to be there. It seems like it's there forever right now. It seems like it's so important. It seems like there's nothing but Twitter, right? A lot of people turn to Twitter more for news than they do for your big networks and stuff, and it's a connection. It's a big connection, social media connection. But look, the way it's managed is just terrible. With the shadow banning, with the blue checks. I mean, who gets a blue check, right? That's almost like your blue check privilege, we call it. Just like, people like to say white privilege, blue check privilege, right? These blue checks think they're the Jesus Christ of Twitter, of social media. Their opinions mean more than everybody else. They should get the forefront of everything. Look, Twitter is like high school. Okay. It's no different than high school. You got your little cliques, right? You got the cool kids with the blue checks. Then you got kind of your rogues and stuff, which are getting shadow banned and stuff, your conservatives. And, in between, you've got this guy, Jack Dorsey, who's trying to make these rules for etiquette and morals and all this stuff and still call it a free exchange of speech. Now, we'll never, ever be proponents of hate speech. We'll never support that. But a free debate is actually absolutely tantamount. And you don't get that on Twitter. You basically got what we talked about. You've got some washed up, aging celebrities that are just trying to hold on to that fame by pandering to a group, right? I mean, what gets you more likes or retweets or more attention on Twitter than tweeting something about Planned Parenthood, right? Or tweeting something about Trump. How Trump's separating families and, that's the easy way. It's low hanging fruit, but that's, when you're a washed up career, that's what you go for, the low hanging fruit. That's all you can reach. You look at, like we talk about the blue checks. Here we go. We've taken what's supposed to be a free exchange of ideas, and now we've categorized and isolated people. What have we done? The very one thing that we say we don't want to do, judge and label people, right? Then you've got these rules that seem to change depending on who they affect. Twitter is a mess. We don't think Twitter is going to ever really get back to its IPO price or be a very good investment going down in the future. It's absolutely a great tradable stock, and we show that. We make money on Twitter all the time. But as far as a long-term investment, we think of all your popular media stock, your tech stocks, your social media and stuff. Twitter is your weak link. So we'll see how that plays out, right, going forward. That's how we feel about it. That does not mean we won't go long on Twitter if the chart looks right and stuff. We're opportunists. We talked about that. We just did that big live event on Thursday, and people were asking, what are you guys, swing traders? Are you guys day traders? Are you guys investors? Are you guys dividend players? We aren't. We're none of that. We're opportunists, right? When we see an opportunity, we take advantage of it, and that's all we care about. So let's talk about the week going forward, right? Because it's Monday. It's been kind of a rough day. If you're long on stocks, you got a little beat up today, which is okay. Mama said there'll be days like this, so you just buck up and it'll be okay. Have some confidence in your picks, but let's talk about the week going forward. So we've got the Fed meeting on Tuesday and Wednesday. We've also got they should be raising rates again, which is good for a lot of sectors and stuff. And we're going to talk about one of those stocks in just a second that is directly affected by those rates. Then we got the big boy, right? We've got Apple tomorrow after the bell, and Apple really the last year FANG stocks. And will it be the savior of the market, or will it be the dagger? Will it be the last nail in the coffin? Is this going to dictate maybe a quarter or two of some downtrend? Maybe we're finally rolling over into a bear market, right? Is this the point? Will we look back at this a year from now and say that's the point, that earnings season in the middle of the year, the summer earnings season, was that the one that turned the market upside down? Well, let's see. Let's see how Apple comes through. Definitely as a service, we like to think we're nimble and stuff. And as traders, we like to think opportunists. We like to think that we're nimble and stuff. And, if Apple does miss, we'll definitely find something, and we'll probably get up short on the market. But for right now, we are not short. We're short the US dollar, as we've talked about. We sold a play today for a nice 57% gain, Huntington Bank shares. We've been talking about that. If you're not getting these kind of results, you know where to look, right? You go ahead and click that link. Well, you can't click that link, but just type it into your browser. We'll post one in the live links for you. But you know, Apple reports tomorrow after the bell, so let's kind of see how things digest out tonight, right? The whole Trump trade thing is just still going on. It's kind of taking formation here. Last week we had some talk about no tariff trade with Europe and stuff. We really haven't heard much about it right now. It seems like they're on bigger things, recordings and stuff like that, which we're not going to get into because that's neither here nor there for us. Remember, we play the markets, you know what I mean? Politics is for, I guess, smarter people than us. So, man, you know, let's talk about how are we playing it? Well, are you buying the dip? Are you BTFDing in this market? 1.5% down on the NASDAQ. 3-day losing streak we haven't seen in tech stocks for 3 months, 4 months. Just really, really a lot of bad sentiment. Are we getting capitulations? Are you buying the dip? Well, we did buy the dip today. We opened a position in the Qs. We're not too proud to admit that. And we'll see how it goes. We also have that play on AKS. We were talking about the last couple of weeks. And AKS is scheduled to release earnings after the bell. They haven't released yet. They're pretty much flat after hours, and we'll keep an eye on that. But that's one of the plays that we've been talking about. But we're still bullish on the market. You know, it looks like this whole tech sell down is really, really overdone. There's a lot of emotion driving this, and that's always a bad thing, right? And it's always a temporary thing when emotions are driving the market. It's why we always tell members, that's why we always tell you, check your emotions at the door. Don't bring them to the trade table, okay? Because there's no place for it. And it looks like this is very emotional selling right now. It's a lot of the media contributed to it. It's big names that are missing, talking about slow growth going forward. You know, but we think that it's very overdone. And it's just like what we were talking about Twitter. We don't think that Twitter is going to have problems growing because there's nowhere to grow. What we think is Twitter is going to have problems growing because nobody's interested in it. Okay. Nobody wants to get involved in that crap show. Now, Facebook, on the other hand, there's a lot of people that, you know, Facebook, as we said, is a behemoth corporation. Netflix is a behemoth corporation. What was the other one? Amazon. Amazon actually had good earnings, right? Another behemoth corporation, you know, Jeff Bezos. He has these revenue streams just spider webbed out. It's a great business strategy, and it's a great diversity is always your answer to tough times. As long as you stay diversified, you'll always do well. So we think this is overdone. You know, yeah, there's going to be some tech stocks that aren't going to come out of this looking anywhere like they looked before. But we think Twitter is one of those. But as far as Facebook, Amazon, and we'll see Apple tomorrow. You know, we'll know tomorrow after they report their earnings. And give us some guidance going forward. So, you know, this kind of plays into, and we're going to have some fun here. We'll track this pick together. We had that live event in Honolulu last Thursday, and it went incredibly well. And our members were kind enough, you know, we wanted to give a gift. We wanted to give a free gift. So we shared one of our plays. Yeah, absolutely, Samuel. You be proud, brother. All our members cashed in on that today. But, you know, we had this live event and we wanted to give a gift, and we didn't want to be like everybody else, right? You know, you come to the live event, yeah, we're going to give you a free play and all this stuff, and they just give you some crap and they never talk about it before again. So, you know, a lot of people did sign up and are our members now, so they're naturally tracking this play. But for you guys that were at the show and didn't sign up, which is fine. You know, if you're not ready, you're not ready. It's cool. But you got the free play. If you're playing it, let's track along together. Let's see how well we do here in real life. So what was that play? Well, you know, our members were nice enough to share one of the plays we're currently in, and we've talked about it for a couple weeks here because we actually got into this play a while ago as a members, and we're in the AINV calls, 921 expiration, $6 strike. And we bought them for 10 cents. Not sure if you can get them for 10 cents now, but if you're at the show, you definitely could have got them on Friday for 10 cents. Now, again, we are not registered professionals. We are just traders. So we're just doing this for fun. Okay. This is something we're playing. And if you want to follow along on it, that's fine. We shared it with all the attendees, and of course our members are in it. So let's see how this goes. Right now it closed today. AINV had a good morning. It was pushing that bid. The bid was 10, and it was pushing that ask to 15. Looked like it might spread open to 20. Might make a move, but we had that push down financials in the late in the market the last hour and a half, and it brought AINV down to even, and so it's about 10 cents right now. It's still break even. So look, if you guys are playing along with that, we'll track it, okay? We're very transparent, and we don't hide anything, winners or losers. So let's have some fun and track this together, and we'll follow that up going forward. Hey, let's talk about something we haven't talked about for about a week or two because it's been getting some attention. Let's talk Bitcoin. Samuel and I always talk about it. The office always talks about it. We got a real good friend, loves Bitcoin. Every time, it got a little cash, he buys some more. He has a lot of faith in Bitcoin. And look, if you believe in a play, absolutely show faith in it. Just because Pat is over here saying that Bitcoin's a bubble and blah, blah, blah. Look, guess what? We own a little Bitcoin. Why not? What if it does go to $1 million? You know what I mean? We want to make sure we make some of that money. So it's a nice little side play. But look, for us, it's a speculation play. There's no value to it. It's a speculation play. We're hoping that some news or some catalyst comes in and does kick it up to $20,000, $30,000, $40,000 a coin, and we cash in on it. But we're not looking at it as an investment for a real investment. Let's put it that way. I hate to say that, real investment, but that's really what it is. And remember, this is what we were talking about with Bitcoin, right? We're talking about people have this vision of a bubble that it just inflates, and then one day it pops and all the value's gone, right? The air is gone, the value's gone. But what we've always taught you is that bubbles don't work like that. Bubbles inflate, and they will have an initial pop. And if you think of Bitcoin, it went up to 20,000, then it had an initial pop, right? It came under 10,000. Hasn't seen 10,000 since then, right? But in between, maybe it'll go down to 5,000, then it'll reinflate, suck some more people into it, pop. And then all those hearts will be broken, and then it'll inflate a little bit more. Is that what's happening right now? Because it's back over 8,000, but it seems to be having trouble pushing off that level. We think it's a bubble. And all these people that are buying at this level are going to be disappointed. They're going to be one of those intermediate pops. So let's see how this plays out. It's a lot of fun. Bitcoin's a lot of fun. But we saw an article that we'd like to share with you on Bitcoin because it kind of bummed us out because we don't want to see this, but it's true. And let me post this down here for you guys. But evidently with millennials, millennials are 5 times as likely as older adults to say Bitcoin is the best way to save for the future. Look, one thing you don't ever want to do is put your life savings, your nest egg, in speculation. Okay, so there's a place for speculative plays. There's a place for that. But you don't put your nest egg into it. Don't put your college fund into it. Don't put your retirement into it. Maybe a little piece, right? Maybe 0.5% or something like that. But to think that there's a whole generation coming up that believes that it's better to go buy Bitcoin than it is to take that US dollar and put it in an interest-bearing account or a CD that gets guaranteed interest. That's a recipe for disaster. So all you guys out there that are watching, don't do that, okay? There's a place for speculation plays, and that's a small part of your portfolio, just like what we're doing, and we've talked about it. Yeah, we kind of talk down Bitcoin and stuff because we really think it is a bubble. But we do own about $400 or $500 worth of it. And if it goes to $1 million, we'll definitely make about, maybe $400,000 or $500,000. Why not? Look, if that $400 disappears tomorrow, it's not going to hurt us one way or the other. Yeah, our feelings get hurt. Yeah, we don't like to lose. But financially, it's not going to hurt us. Wealth building, it's not going to hurt us. That's a speculation play. And that's how you play a speculation play. Yes, yeah, Samuel. I mean, we talk about that all the time, right? Is that there is a big difference. Your portfolio is for building wealth, And speculation is fun, it's exciting, and it can be mega profitable. It absolutely can be mega profitable, but there's a place for it in your portfolio, and it's not 30% of your portfolio. It's not every extra dime you make, you go buy Bitcoin thinking that you're saving for the future. That thing goes to zero, man. There went the future. Ouch. Why not take that money, put it in a CD, 6 month, 1 year, whatever you want to do with it, get the guaranteed interest, right? You can always go buy Bitcoin later. Think it's going to $1 million tomorrow? Good luck with that. So let's go down to the questions, because that's pretty much it. Well, you know what? Before we do that, let's talk about our saying of the day, because we got a good one. So, we always talk about success, right? We always talk about how important it is and how everybody wants it, and it's the dream everyone chases, right? Success brings all kinds of good things into your life, right? It brings personal pride. It brings pride from your loved ones. It brings personal security. It brings security for your loved ones, your friends. They want to emulate success. It's just a feel-good story all around, right? But where is success, and where do you find it, and how do you get it, and where do you sign up for it, right? There's an important thing to remember about success, and let's talk about that right now. Success doesn't come to you. You got to go to it. You got to go get it. You got to get success. That's how success works. If you think you're going to sit home and post on a message board and that's going to make you successful, well, hey, that's nice. You were right on a message board and you just impressed about 20 people, okay? And every one of those 20 people 5 minutes later forgot who you are. Success is different. You got to go get success. Okay. I'm leaving that comment by Samuel Levitz up there because this is important. Success. You think you find success in speculation stocks? No, you find success in wealth building every day. You work towards more wealth. Tomorrow you have a little more wealth than today. And then the next day you have a little bit more. And then you get the joy of that super C word. What is the best C word on the planet? Compounding, right? Compounding. Even if you make 2% on your money this year, well, then you make 2% next year. Think about it. Instead of having it in Bitcoin where you don't know what's going to happen. If you did buy those CDs and you just get that 2% a year. Well, this year I got 2%, right? Well, guess what? That 2% I got this year, it's going to get 2 more percent. So now it's compounding and compounding. You're wealth building, wealth build. There's no room for speculation. And that's why I left that comment up there. Thank you very much, Samuel, for that, because it's an important point. And so look, remember that, okay? Success doesn't come to you, okay? You go to it. Don't sit around waiting for success. Don't sit around waiting for the check to hit your envelope or your mailbox. You know what I mean? Just go get success. It's there. So it looks like AKS released and they're down about 50 cents after hour. That's no big deal. We'll see how it goes. We haven't had a chance to actually see the article yet, but we'll keep you updated on that tomorrow. It's us, what we don't worry. Nothing. Again, that's another good question that we've had in the past, right? About after hours trading. We don't participate in any after hours trading, and we do watch futures because we enjoy it. But futures are never really a true indicator of what you're going to get in the market day. Yes, futures can be blood red overnight, leading into the open and have a nice little gap down, but they don't dictate how the trading goes. And same thing with an overnight earnings report, right? So that sounds like the words of a person that's earnings just missed, right? But anyways, we'll keep an eye on old AKS. It's a steel stock. We'll see how that goes. We're actually up on the play and stuff, and we're nice and way out in the contracts, but we'll keep you filled in on that. So let's kind of close the show. I'm going to quickly go through the comments here and see if anybody had any questions. A lot of greetings, and yes, Samuel, no matter what happens with AKS, we hit that nice 57% on H-band today. We're in that nice AINV, and we've invited the world to join us, follow along on that. All of you that said hi, right back at you. Thank you very much. So let's call it a show. Let's get ready for tomorrow. Don't forget, we've got Apple earnings after the bell tomorrow. We've got the Fed on Wednesday and Tuesday and Wednesday also. We should be getting an interest rate hike. Here's the other thing about AINV. AINV is a business development company, what we refer to as a BDC. It's a medium-sized BDC too. They've got about 24 billion, I think $2 billion under management in their portfolio, but they've got a lot of moving floating interest rate investments. So every time the Fed raises that rate, their portfolio's profit goes up. So that's a good thing, right? Looks like we're going to get a rate hike tomorrow. We'll see how that, or not tomorrow, but Wednesday. They start the meeting on Tuesday. They'll make the announcement on Wednesday. Again, we have Apple after the bell, and we have a bunch of other earnings coming down the pipe. So we'll see how it goes. You guys have a great afternoon. We'll see you again tomorrow afternoon, right after the market. So again, from Honolulu, thank you very much for joining us. We'll see you tomorrow.